Okay. Let's get the party on the road. That out of the way. Oops. Admit. Oh. Good morning if you're already here. Okay, it is 9:28. Decent enough time to start our day. First things first, I did not get an alert that said Thursday's 2 p.m. price has been traded to as yet. So going into the markets, that's going to be my first thing to look for. I'll show you in a second. Next, I want to just kind of check up on a little bit of the money flow over the weekend, see what's going on. So we mentioned on Friday that if Bitcoin trades above this level, the Nasdaq was likely to gap up at the open. As we can see, that did not happen. While Bitcoin did trade higher, did not trade above this. So this level becomes irrelevant going into the week. This level, oh, okay. This level is technically not as important anymore as well. So I'm looking at this push and I'm thinking, okay, if Bitcoin is going to move before Nasdaq, and I expect Bitcoin to be heavy, trading down into here for the coming month or two. The only thing that Bitcoin has in here would be internal liquidity. So that would mean this FEG comes on the table, this candle's high comes on the table, and this candle's high comes on it. This is like absolute the best case scenario possible. Rules dictate that once we trade above this high, after pulling off this low, if this candle's low is higher than this, then it means this is going to be where your CSD is happening. However, this is not higher than this. So I'm thinking Bitcoin is going to look like this. So if Bitcoin is going to look like this high is already here. It being a run is already done. So it tells me the sell-off is not happening today. Full stop. And that's how I'm going to be going into the day. But I don't make the rules. I will check the money flow. Going back to same basics. All the Bitcoin profits have been pulled and it's been repurposed or repositioned. Because of the economic climate and fear, I don't think they're going to be putting it in the stock market, which means as Bitcoin trades lower, Nasdaq should follow. Gold and oil are the only two candidates to get the money. Nobody pumps the money into the Forex market, sadly. Gold and oil are the only two candidates. Gold has already rallied. Oil has failed to get to the target I wanted. So, since this failed towards a draw liquidity, then again, rules say this becomes a failure swing, which now says order blocks are born right here. So, real simple. Bam, bam, bam. This is how I'm expecting the money to flow. If the money flows like this, then I have a very good read of what these four markets are going to do for the next 3 months. That's it. So now we'll go back to NASDAQ. First thing I want is Thursday's 2 p.m. open because we did not get there on Friday. I don't need Sunday's 2 p.m., but I'll put it on just for the sake of completeness. So the day ended there. Well, it'll be Friday 2 p.m. and not Sunday, really, because Monday is this. So then the new day starts, 720 reference point as usual. And I want to know, since the new trading day started in here somewhere, did we trade back to that open price? No, we did not. But because this has not yet been traded to, I'm essentially going to have a band. That band. It says Monday is going to hold sell side liquidity. So once the order flow shifts to lower prices, that's my drawn liquidity. Outside of that, pretty simple. I'm looking for the market to reach for this and then sell off. I don't know what the calendar looks like right now. I'd say, where is that thingy? There we go. This week has everything on. Good Lord. Let's go this save time. There we go. So, what the calendar is now saying, Tuesday has impact news at 9 o'clock, and then somewhat high impact news at, what is it, previous? Or is this a, could I have clicked previous and it did it? I don't know. Is that what you're saying? Yes, that's what you're saying. So, my analysis from the money flow says shorts for Bitcoin is likely to be tomorrow. This is telling me high impact news is coming in tomorrow. 1 + 1 = 2. Again, that puts me at, I should be looking for longs and wait for tomorrow for the sells. Easy. Now, just looking at this, right? Zooming into this portion of price, let's make plans for how we're going to trade and not just rush to trade, air quotes, in line with order flow. We have a bias because of order flow, but we still need a level to trade from. When we take a look at the market over since the start of the day, clearly you can see that there's not been a lot of sell side runs. Clearly, right? Before 720, this is the highest high. So think about it like this. If you could see a previous weekly delivery, think about it like this. If you could see a previous weekly delivery and the high of the week is in, for you to be bearish, you'd like to see the market start breaking down and taking daily lows. If we're trading at the previous high of the week and printing support structure, I would not be bearish. No magic, just logic right there, right? So, with that in mind, I am going to anticipate that 720 will behave like a Monday in a bullish week. What does that mean? It means the previous daily low gets left alone, support structure prints at the previous high of the week, and we just go one-sided. Simple. Now, with that framework, let's start translating it to trade ideas. For simplicity, again, I'm going to tag and say that's the open price for me. That's the open of the air quotes week. Just saying. I would have rathered the market hit this level, reject it, then make a new high. When they are going to be making a new high, I would want to see them trade above here. That's simple. Trade above here. So now, while I have a bias, I don't have an entry or anything like that. So I'm going to be waiting for them to trade above, close above higher prices. So that's my mile marker. My mile marker becomes this candle's high. Trade above, close above higher prices, I look for an entry. Trades down, I look for this to hold the price and then we'll continue higher. Simple. I am long since last week. Since the setup, the things I framed on the call, I wanted what I wanted. It didn't play out. I got my entry. As you can see, it failed up to go higher a lot of times. So I'm still long from all the way down here, but irrelevant. Just to show you, my plan last week was to get here. It failed. I don't switch bias simply because my setup fails, and I don't go trying to figure out why it failed. That's what the rule says. That's what I'm doing. Amen. It should be 2 p.m. Wherever that is. There. Same place.
Good morning, Kish.
Good morning.
Wouldn't you prefer a sell side run first before pumping higher?
Right. So that's what I was saying. If the previous week is just one-sided, it makes sense to anticipate an internal run. But if it's a one-sided week, before I look for that, continuations must fail before I look for reversals. Think about that statement. If it's one-sided price action, continuation must fail before I start looking for reversals. So what continuation looks like is everything I just outlined. I think about that for a little bit.
Okay. On the futures, we actually did close above this. So how would you frame that? Like this green candle closed above here.
Right?
Yeah.
So then if I was looking at futures, the first thing I would think about is this guy being an order block. So CSD. And in this case, it would be a CSD that closes through the open versus just, you understand, right? Person carry.
Yeah.
So it is not ideal to buy this candle for me, simply because if I was looking at the futures feed, I'd like to buy this because this is closing about 50% of the down candle where I want CSD. So this is what a higher risk I guess, moderate probability trade looks like. Buying this to make the
Expecting
CSD. Yeah.
expecting a bag on the top.
Well, not a bag yet, because usually after CSD, there's some form of retracement.
Okay.
So this would be me buying ahead of time, waiting for it to get here and come back. If I am going to be taking a trade like this, my personal rules say I have to be entering below the open of this candle. So this must open, trade lower. I fade that, then it snaps back. Because the reality is order blocks are not 100 points or 50 points in length. So again, not saying buy that, but just framing. For all the continuation setups here, that's what it looks like. No entries or nothing like that yet. Just two scenarios. Close above here, reject the open, higher prices. That's it.
So, Kish, what will make you bearish here?
What made me bearish here?
Yeah.
Running these lows. If it runs these lows, then there's internal liquidity about here. Or maybe
Okay.
here. If it runs these lows, I would think this is internal liquidity right here. And then this is as far as it would go before going higher.
Wouldn't you consider this the purge and then closing below 720 be enough to do that?
Well, it must close and then reject 720 open from below.
Yeah. I
And
mean,
then I'd say that's a continuation setup.
okay.
But for right now, again, continuation setups must fail before I look for reversals. Can't look for reversals in a one-sided market just because I want the top to be in. That's what we're starting off with. We can see that it's one-sided. We can see that it's just been running higher and there hasn't been any sell-side run. So it makes sense for a sell-side run to happen. But before I go thinking this is the top, let me go short. Continuation must fail first. So if you're thinking of like I guess on the easiest way to communicate, if you're looking at all of this one-sided as like left side of the ICT market maker model, and we're wrong. This is smart money reversal, and then the low risk short is going to come. So I'm not worried about missing a setup here, and I'm not jumpy to go short there. But if it is not going to do a sell side run, then again, here is going to hold the market. So nowhere near confirming anything yet. We haven't closed above here. We haven't projected that open price. This is a good time to sneak in questions if you have any while we wait.
Yeah.
Hola.
Before you take your questions, I was showing you something on the calendar that if you click none, then it no, yeah. If you click none, then it erases all of the ticks and then you can just click the one instead of going through and clicking everything.
Yeah, that's what I did. That's what I did. That's what I did. I was just
Oh,
instinctively checking them one.
okay.
Yeah.
Okay.
You didn't see when I clicked none and then click this one?
No, I I was distracted.
No, he was calling me old. I get it. Okay, interesting question.
Well, hey Kish. Hello Kish.
Hey,
Hope you're good and how's the family?
family's good. Still sleeping, but good.
Amazing, amazing. Just not maybe it might not be very interesting, but for me, if I was for people who trade higher time frames, so where we can have our trades running for days and stuff. What is the kind of like key levels? I mean, in terms of maybe an equivalent like settlement range or something that you would advise to use? Because typically, currently, I only use old failed expansions. Old failed expansions on the higher time frame to trade. It's effective, but I feel like maybe that might not be enough actually. So I cannot do maybe because of engagement now below 1 hour. What would be your advice for such kind of engagement of price? Thank you.
Okay, so if you've known me anytime before 2025, you know that typically I start my day with some type of daily analysis and all that. But then I found that the impatience I have from being a scalper does not pair well with looking at long-term analysis. That's the first thing. And that's my comment on before I answer your question. A scalper's patience with a swing trader's analysis is a recipe for disaster. Because when you're scalping, you're looking for something to play out shortly. And vice versa, if you're swing trading, you are comfortable holding something for longer. Now I know my strength lies in scalping. Being able to read the analysis is just strength for my scalping. On a daily chart, I would prefer exactly what you said, failed expansion logics, one-sided price actions, and then daily cycles. If I had to lend strength to a higher time frame, it would be daily cycles. It really would be daily cycles. But as this is right now, I wouldn't tell you to like slap technical analysis on this, because look at it. This looks like 1 minute Asian session for some very, very weird pair. There's gaps everywhere. The candles are small. They have big wicks. There's not a whole lot of technical stuff you can derive from this. But look at the entirety of the chart. Here we have a price leg where there was just a big move away from a level. Why it happened? Let's say we don't know. That one-sided price action created the imbalance or range for us to, or imbalance range for us to pay attention to. Same thing here. For simplicity, let's say that this market just started running lower here. Why? We don't know, doesn't matter. What we can do is see that highest point, lowest point, since this involves a gap, wherever the gap open is likely to be the start of the delivery. It doesn't have to be exactly that day or candle, but it's going to be close to there. Just putting the pieces together. If this is a gap up followed by trade lower, arguing that it started here is not wrong. So then let's read NASDAQ daily chart from here. A delivery started. What do we have? High, low, one-sided, waiting. Then commitment to lower prices. Then a run on highs. No significant closes above the highs. Then we broke down hard. So then after the run on highs, buy side, sell side, retrace and expand. Typical stuff. We've had a buy side and the sell side already. So then in this delivery, in my humble opinion again, it would automatically ask me to look at this range, buy side, sell side, and then expect a retracement and an expansion now. Retracement, we have premium level. So this candle's high and open automatically comes on the menu. Not that far away for NASDAQ, it's like 300 points. Comes on the mini. Expectations, no. If it's buy side, sell side, retrace, and expand, I'd be expecting 1, 2, here. And that would be my expectation. Using understanding of ranges to derive ranges, then order of delivery to justify the processes that are taking place. That's it. That's it. Hopefully that does not sound weird or anything like that.
No, it's sounding good. I guess when I also rewatch it, it would make more sense. I think the next question then I would ask, if you do not mind, of course, would be, so if I'm using maybe daily levels and then hourly levels, an hourly entry. So do you want everything? So for example, this is our retracement. Do we want the day to finish? And so let's say today it gets there, and then tomorrow go on the 1 hour, or it's okay to go on the 1 hour once we are getting to that level on that same day before the daily candle close.
So I find that it's easier when process in terms of our approach to the market goes like this. Key level, deliver at the key level, and then whatever logical deduction we can find there. If the key level for right now is right there, find it very, very interesting since 2 p.m. is also just about there. If the key level is right there, it means when the market gets there, if it gets there in one candle or not, when the market gets there, that tells us what we should do. And it's always the same set of ideas. Is this market likely to retrace or expand? If it's likely to retrace, it's going to retrace towards the open. The open in this case is all the way up here. We have bounce around level, yay. So right now I'm thinking retracement, internal liquidity, and then we leave the range. It might not sound like a whole lot of moving parts, but it really doesn't need to be. It just needs to be a consistent process that we follow. Dealing ranges, big deal. Buy side, sell side, retrace, and expand. This is happening in the order that we would like. So whether I take a trade here and it misses or not does not change what I want. And that's why, well, again, I don't think this delivery is going to be a difficult one. I believe August should be a hard month to trade as the participation starts to fall and DLPs start playing around with people. It's going to happen. It's an annual thing. But for right now, just a process or processes to get us involved should be enough.
Okay. Thank you so very much.
But I have not honestly looked at an hourly chart itself in a while, but I am aware when I'm looking at charts where my hourly highs and lows are. I just
I have sufficient, like, well, maybe not, but at least for the last 4 months or 5 months across 7 to 8, 10 pairs, 1 hour. The data says it works. Of course, the win rate drops massively on the hourly versus M1 and M5. But of course, the number of positive points and pips works. So I was just trying. I'm not, but thank you. You know what I mean. Thank you. Thank you. The data works even on the hourly. I'm telling you, if you want that information.
all good, all good, all good, all good, all good, all good. I think you're one of the persons that I'm due to have a conversation with, as a matter of fact.
Whenever you're ready, coach.
It's just finding the time. It's just finding the time. 3 minutes until the hourly close, and then I will participate. I wonder if David is here. David here?
Yeah, I just popped in.
It's good. How was your weekend, my friend?
It was good, brother. I'm expecting retrace to daily open and then maybe probably continuation higher, I think is the plan for today.
Okay. I can understand why you're looking at that. So I don't know if you were here when I started explaining, David, but I'm looking at, just so we're on the same page or just so we understand each other,
Yeah.
I'm looking at these as one-sided wicks. So I'm looking for first confirmation that it's one-sided because I have my 2 p.m. level that was not hit. Did I take it up? There it is. So I'm thinking high of the week somewhere close to here and then lower prices. So for today, as of right now, I have a level that's equivalent to previous weekly high, and I'm looking for support structure here. If it support structure fails, then I know you can see the internal liquidity that's there. Then I want to, well, not support structure. If continuation fails, by not giving us close above this high, all the good stuff, then I'm thinking internal liquidity. But the continuation pattern or process must fail before I entertain any type of shorts. So after 8 o'clock, I'm going to look for one of two things to go long, either an entry in here after 8 o'clock or open rejection and then a long. And I'm going to leave a runner for 2 p.m.
Okay, interesting. So you're not looking for the daily.
Open to be traded up.
Yeah, I see that you.
Yeah, so that's what I was saying. We can see that it's all one-sided. And we haven't even retraced to Friday's 2 p.m. I might need to get a glass of water, but before I do that. So it makes sense for internal runs. But the delivery right now is one-sided. So this one-sided delivery must fail. And as Mohan was saying, one of the first things you want to look for is like a purge and revert type setup. We don't have anything from a continuation standpoint or a bullish standpoint failing yet. So trade the trend until the end. Get in.
Friend
yeah.
is a friend.
I have half a mind to put a position here, but too many failed attempts to CSD the 732 candle. Said that I should sit down and wait.
Just an odd question, Kish. If you say it's one-sided, but looking at the M4, everything is like efficient from the start of the day.
Mhm.
It's just up, down, up, down. So how do you consider it one-sided? Like every day is higher?
Yeah,
Every
one side
cycle
has
has.
been going higher since the look at in relation to the daily open.
Yeah.
Since the open of the day, we haven't gone below it. We just
Oh,
want
I
to
mean,
make
if you
move.
if you're looking at efficiency wise, it's like it's all balanced, right?
Yeah, just eyeballing, we can see that every time we made a new high, it comes back rebalance and then it makes a new high. So
Okay.
everything here is one-sided. So even if it's going to be bearish, I don't think the bearish delivery is going to be smooth where you enter and you hold. It's probably going to do the fall, come back, fall, come back, come back, come back, that type of setup. But that's fine. It's August, we're expecting it to be like that. But this must fail first. one of two things must fail. Destroy this, put a down candle there, and don't take that down candle's high. Close above here. Nice and easy. But since this candle has about a minute left to close, I'm going to grab me a bottle of water. So, one moment, s'il vous plaît. I am back. So who's in the chat? Good morning, Arcane. No. No wine, no wine, no wine. About 2 weeks alcohol free. Nothing to brag about. No. Not actively avoiding alcohol like for any particular reason. Just chilling. Okay. So this long setup that I'm going to take, not right now, maybe after this candle closes, is going to carry an inherent risk. But instead of lecturing you about that, what do you think the risk is going to be when I go long here?
The fact that we are one-sided the whole day up.
If it is open, that's the only risk here. Risk is equity is open could spike and take me out before it moves. So if my analysis is sound, my key level is sound, the delivery at the key level is supporting the direction I want to trade, and equity is open is possibly going to spike me out. There's only two logical questions here. I am going to trade, full stop. Like I'm going to take that buy. Do I take that buy on the first confirmation, or do I take that buy after equity is open? Those are the only questions you ask yourself. There's no right or wrong one. It's just your comfort level.
Yeah, and like a little bit of a different like point of analysis, but like I had the previous weekly high marked like you did. And then at least on my contract, this created our order block. So I was watching the delivery at that key level. So like I guess I understand why you're bullish, because like we have so much above us that like we need to, I mean, everything from Friday, all the levels from Friday were still above us. But yeah, I guess like my initial thought was like once we run this high, key level created, watching the delivery at the key level here, I was definitely thinking more something like this, but yeah, we'll see. We will see.
Yeah. And I want you to be confident in your analysis, because at 720 there's only two likely scenarios, right? Not three, not a million, just two. just two. It just happened that today we're on the opposite side of that coin.
Yeah.
Expand and leave the range, retrace towards the open. Simple. 720, those are the only two likely scenarios. There's nothing else.
And like when, go ahead, sorry.
No, go ahead.
When you're reading the delivery at the key level, for me, because like, and just take this for what it is, but like this was an order block for on my feed. Sweeping
I
previous,
remember more was saying,
you were saying, sorry?
no, Moan was sharing earlier that on the futures, they closed above that level.
Yeah.
Mhm.
So I guess like my innate process there that I revert to is like, well, if that's the key level, any type of CSD here would validate me for at least getting to the open here.
Yeah. And that's what I was saying to the guys earlier. There's only two possible bullish scenarios here. Support right at that high, or support at that open when it comes there rejected, blah, blah, blah. So I get that you want to see something like that. I'm not against that. If I go long and it trades down to here, I'll take the stop loss in here
Yeah.
and, look for something there. So again, when you think about the trade idea from order flow processes, I have no problems being a buyer. When you think of the trade idea from risk standpoint, again, this setup carries inherent risk. Inherent equities open, stop out, inherent run back to here before it moves. So the trader has to decide, do I size down drastically? Do I wait for more confirmation? Or do I anticipate that this is coming and leave that alone?
And like, what's your reasoning then for only trying to get buys here then? Like if you're knowing that this is a situation that can play?
My bias is that this market is going to trade higher under retracement obligations.
I see. Yep.
So if we're bullish and one-sided, and I can see previous weekly high, then one of two setups are going to play. Support at the old high, retrace to the open. So these become my key level. The deliveries here tell me if I should trade. First thing that tells me I can go participate, close above that. Second thing that says I can participate, reject this open price. So it comes down with a wick like this, pang, there's a down candle somewhere, pang, pang, pang.
The part that like I consider here that sometimes we'll deviate on is if this like accumulates through the high, like I see that as an order block, but yet like you're seeing it as like a continuation setup.
So order blocks accumulating at highs, bearish order blocks, 100% logical, standard, easy stuff to see. If we reached up to accumulate on the old high, purge and revert. Purge the old high that you went to accumulate, revert to lower prices. Where should the revert be to make me bullish? How do you know that this purging is done? The purge on buy side liquidity, how do you know it's done?
Validate the order block, close below the open.
Not necessarily. Close below the open, I agree. I am using a close below the open here to frame me being wrong about this going higher. No. But again, the continuation setups must fail first before I start thinking, okay, it's going to do this and then lower prices. If it does this, no CSD to down candle, I'm all for internal liquidity. I will short for internal liquidity. But it's yet to fail.
Yeah.
Because it's yet to fail, I'm yet to execute. Think about this. Oh,
Go. No, go.
When was this order block CSD? Right here, right?
Yep.
Do you see any entries after 740 that you could have taken?
Well, it just would have been OB validation, internal liquidity, retracement.
Okay. What would have happened to your entry?
It's just a stop.
Just a stop. It's just a stop. I'm cool with just a stop, so I get that. What I'm saying is this has not yet failed to produce bullish structure in a one-sided market. Anticipating retracements simply because we run a high? No. No, 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 no. Remember, there are days when it's just one-sided. So it goes up, you try to short, it pulls back 5, it expands 10.
Yeah.
I'm not saying this is one of these instances, but I'm identifying the characteristics that make it likely. This should be my buy.
Buy.
Why? What did I want here to be a buyer?
You wanted a support narrative, so I'm assuming that this would be your order block for bullishness.
Right. So I'm looking at buying this. So taking my phone.
Yeah, see,
putting it-
that's interesting. I would have been seeing this CSD as the first sign of the delivery at this key level of this.
Okay, fair enough.
I mean, to be on David's point, this will be failure swing OLR, right?
Failure swing OLR and lower prices.
You just gotta pick your direction and apply the
Yeah.
logic. It's that side.
I see what you're saying. I see what you're saying. I see what you're saying. But I'm looking at this right now. That's what I'm
Interesting.
looking at.
That's a big stop on the futures, though.
Well, it's framed around here. If you're looking at that, it's framed around this candle, but this is a stop run, so I'm just being careful. It's 10.
And so this is an instance for you where like you're kind of disregarding a retrace to the open just because you think like the bigger like protocol under place right retracement. So you're not even looking for any type of run back lower.
So I'm not disregarding the retrace to the open. Remember, there are two things we expect here. One is retrace to the open, and the other is expand and leave the range.
Yeah.
Today is a day where I'm favoring leave the range over the retracement.
Okay.
Wouldn't you consider mitigation ideas here?
Mitigations would be, where's the purge? Where's the purge on this side?
Well, it'll be this down candle, though.
Indeed, we're nowhere near that. So again, the bullish.
No, I mean, if we look
structures-
at that, this and then this would be
So-
the one, right?
So double purge. You sure you're not hunting for something to be bearish and ignoring what is there?
Yeah, that's the thing where we get caught up in trying to push the market to give what we want, trying to see something that.
Well, to me, it's following like the daily like plan / structure that we try and stick to.
And that's why I am, remember, all right? Remember, in advance, I'm expecting August to be difficult to trade. And that's why I'm doing this. I'm doing this to create an environment where you can see how to stay rigid despite the markets looking unfriendly. So that's why I'm trying to explain everything as I go along versus showing you my executions in like after the fact. Even though I don't do that, I'm explaining everything step by step. One-sided market, old high. The market running a high in a one-sided market is not bearish in itself. The market failing to print support at old highs in a bullish market is not bullish. So, old high, we outline what a bullish structure would look like here. Let that fail first. Let the continuation fail before you think reversals, because we have too much information showing one-sided deliveries. Don't trade against the order flow. So again, just to address what Mohan said, the only thing here that would have been uncomfortable for you would have been the stop size. Cool. I'm not saying this has to be your stop. This is just how I'm framing the stop. Everything was framed around that candle right there when we were trading there. Failed to CSD. Nothing, 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 nothing. We waited, we closed. Now we have what we need to be a buyer. So your mind goes back to, I have my bias, I have my key level, that's my execution.
Remind me your key level here, Kish. Are you saying your key level is what again? Just the order block?
The order block.
The bullish one.
Yeah. So again, why is this my key level? Simple. Old high. In bullish situations or bullish order flow, the support structure prints at the old high. One of the easiest support structures at the old high is down candle that CSD and we push higher. Right? It's
Yep.
like, yeah, that's the easiest support structure that we can think of. So all I did was I anchored my analysis. I am not trading before there. So this is my look back period or point, or this is how I anchor myself in time. I'm nowhere over here. I don't know what's going on. But when I'm here, I can look back and see what's going on. Then I get the levels. This one is just, you know, that's obvious. So now, if this is likely to trade lower, something is going to print between here and this high. That makes me bearish.
And before even seeing that, it would be, in my mind, we would need a buy side run that fails.
Okay, I get that. Expecting a buy side run here is fine. But I'm saying we've just been one-sided, There is no reason to just see a one-sided market and call a top. You don't call a top in a one-sided market. You look at, is this move higher failing to continue higher? Then, if it's failing to go higher, that's not bullish, so it must be bearish. If we're, let's say, what if we call bearishness and it consolidated? Would we be wrong? No, because that's not, you know, consolidation is not bullish. So you have to start with, if this, then that. If it is still bullish, support structure will print at the old high. As Mohan said, we've been efficient. Everything that so far has been efficient. Print a high, support structure. Print a high, support structure. Print a high, support structure. Print a high. All of this here is not bearish. So while there's only two possible scenarios, namely retrace towards the open of the day and expand outside the current daily range, in this environment, I favor going outside of the range more. Now, when we go outside the range, is it telling me that it's running the range high and going lower? If that's going to happen, then the support structures that print at the range high should fail. Bullish order blocks should not hold. Let's start there, because that's the first thing here. A bullish order block at that low, that high, should fail, and that makes it bearish. How do we get a bullish order block at that high? There's going to be a close, there's going to be down candles, there's going to be expansions through the high. When those happen, we're able to identify where the bullish order block is and then say, if this, then that. If it holds, buy a retracement. If it doesn't hold, look for a short. That's it. It's not anything more than that. So we find the high, we find the down candle because we go left to right. That's the first down candle that prints at that level. So that's my first point to anchor on. That's what I did. So now I'm reading. Can we CSD this to show that there is support structure printing at the old high, thereby leading to higher prices? Hasn't printed. Okay, I'm not buying. I'm not I'm not buying. Here, I want to be a buyer. Retrace. It retraced. Buy. So now, equities open is coming in. Again, this trade carries an inherent risk of equities open spike. If this spikes down, no big deal. No big deal. But again, I am not afraid of a spike down because I anticipated way before my entry that a spike could happen because equities open carries that volatility. How do I protect myself against that? The size I use to trade. That's it. That's it. So now we wait. Been a while. Game B. 849 wick retrace to second FPG on 5-minute chart. Oh, 5-minute chart. Not bad, not bad. Here comes that spike that I would like to be higher.
Morning, Kish.
Good morning. I heard a very faint voice, like you're far away.
Oh, sorry, is it better now?
Much better.
Have you explained why you use M4 now? I mean, I know it's been a while, but M4 seems strange.
I haven't explained it publicly, but to make it simple, it's much easier to derive key levels from our M4 chart. Let's just put it at that. Anything else is just going to be extraneous, and encyclopedias collect dust, so we don't want to do that. M4 is just better. Full stop. Unless you can prove me wrong, M4 is better. Equities open is coming. And with it comes the logical question: hold through equities open or not? What say you? What do you think? Assuming you're also long, because I know that some of you just watching. Assuming you're long, right?
You hold it.
You hold it? Why?
Yeah.
I want to know your reasoning why. I'm going to hold.
Well, since my reason is because my stops is not that much, just 10-point stop. So
I can vibe with
I
that.
won't mind losing 10 points.
Mine is actually 12. I entered at 67 and my stop is at 55. So that's my math is off. That's 12. So I could use an M1 chart to kind of bolster the idea, but I'm pretty sure you can see what I'm seeing here, so no need. But if you have multiple screens and you want to watch it through an M1 as well, by all means. By all means.
Kish.
Hola.
Okay, so I think another question I would ask, because similar to maybe David and the other guys also, a part of me also, I favor the shot because in this instance, we're failing to. So what I've always looked for continuations is, all right, at that high, I want a bag. If you give me a bag, you trade through it, beast card, I would continue up. But in this instance, I have a level. I'm looking at it as, all right, for instance, just for instance, okay, this ran into this level. First candle, second one we closed below. Okay, I'm going to sell this. and I'm going to sell it down.
Mhm.
But in this case, I understand the logic that you've explained, but how then do I know that to trust an OB versus waiting for a bag? Or is it okay to let all this, like, look at it and be like, all right, it's not giving me a bag, I'm not going to do anything. I'll come back when it does that. If
Okay.
that makes sense.
If you're going to be looking at it specifically through the lens of OB, then let me ask you a question. Let me draw something for you. Where is the order block in this one?
There we go.
In this one would be anything
Right
that
here.
goes above this. Yes.
Okay. Where's the order block in this one?
Oh.
Aha.
Okay, that is interesting.
It
Well,
is.
for me, it is, but okay. Okay.
No. Talk. Let's talk.
Okay.
Let's talk.
Okay, for me, in this instance, all right, and the reason why I didn't want to say that because now I do not know if I'm forfeiting, but I would just say it would totally depend on if in this instance this would have been what I would have thought about if I'm looking at this before this printed, if that is a close.
Fair.
Depends on if this is a wick or if this is a body. So if it's a
Okay.
wick, takes me out, all right. If I was using it, or it doesn't matter. It doesn't invalidate my order block. It just takes whatever is there out. But if it's a body, then it switches to the latest one until
Nice.
it's below that.
Now let's talk about it. This is our liquidity pool,
Mm-hmm.
and it was taken,
Mm-hmm.
and this is your high, right?
Yes.
Specifically, I want you to see this high as this high. Lies. I want you to see this high over here as the one in the middle. If
Okay.
that's the high, it would assume that my order block is already in here,
Yes.
which would assume that this needs to happen in relation to where this low is, right?
Yes. Yes. Mhm.
So we need this. If this is a purge on highs, then we need them to destroy lows.
Yes.
Now, I don't know if my eyes are going bad, but this does not look like a destruction on lows.
True.
So that means this is the high of the week or the high of the previous delivery. At a level of confluence, a new delivery starts. If a new delivery starts, I want to know if they're continuing whatever this is doing by doing what this should have done. Take me below the lows. One moment, please. I need to manage.
Manage.
I need to manage.
Mhm.
And ladies and gentlemen, thank you for your
Attendance.
Madness.
Now I go break even because again I'm not crazy. And I leave a tiny runner because why not? I don't know if equities open is going to spike lower, but I'm going to leave a runner because I have the support structure I want behaving. So now what would make this beautiful is a breakaway gap. So this candle body closes near to the wick and not like a big wick candle. And then the next candle leaves this space in here. So, but yeah, assuming that you've managed because you're not crazy as well, let's talk about the setup.
Sure.
Old weekly high, okay? Old weekly high. It could be a whatever high, but old high in a bullish one-sided delivery. Let's pull this down and give it some meaning. If I'm watching this real time and expecting an order block here, I love it. It has everything I need to be growing boy. An order block at this high is everything I want to be short. Cool. Let's say an order block prints. Here, let's say an order block prints when this high is being created. I'm going to short a CSD, right? It's a no-brainer. But that CSD short must support or just go, it must go lower. If it does not go lower, then clearly I am not in bearish order flow. Okay, no problem. I'm not mad. We come and we take the order block that I'm expecting to be capping the weekend going lower. All right, we take the high. If it closes above that, that's not bullish. In no world do we have a run on highs and an order block prints and we close above the order block and it remains bearish. No world that I'm aware of. I've only been to this one, so I cannot be bearish here. But I can be bearish in this general vicinity. Why? Or how? When the bullish continuation, fractals, patterns, process, whatever, fails. So what does a continuation look like here? It looks like trading above an old high, finding support, going higher. Easy. Easy, right? So
Yes.
then, if I have that definition of what a continuation looks like, I'm going to first look for what supports the continuation. What if I wasn't bearish? What if I wasn't bullish? My analysis would say this makes the order flow bearish or whatever. I'm going to look for what supports my analysis first. That's the point of doing the analysis before we enter and not doing the analysis after we enter. So what supports the analysis? A down candle here, close above higher prices. Do we get a down candle here? Yes. Step one of my process done. Do we get a CSD? Nope. Wait. There we go. Step two done. If the process is create a bullish structure, CSD, buy and retracement. Create a bullish structure, check. CSD, check. Why am I going to hesitate to buy and retracement?
You would not hesitate.
Well, I mean, clearly, I'm not hesitating on that. I got my 50 points. A little bit below 50 because it kind of pulled back on my entry, but blah, 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 blah. Irrelevant. There we
Hey,
go.
Kish.
Hi.
Hey, just a quick question. So I know your analysis is supporting that, reaching that 2 p.m., but could you just maybe emphasize a little bit more on why you're prioritizing 2 p.m. before using the liquidity that has remained, throughout the day? Like, is there like, from a priority standpoint, I understand that it won't go low before that 2 p.m. hits, but
No, I'm not saying it won't go lower. I don't move markets. What
no,
I'm
I mean,
doing is,
yeah.
again, right? I anticipate August is going to be a difficult month to trade. I've gotten a lot of traders telling me that they're quitting because it's just not working out. And I'm human. I'm human. I feel like I can do something about it. Not convince them, but at least guide them. So I decided I'm going to trade live with you guys in August. Just to show you that it is not impossible to do this. It just needs a little bit of realignment. So I'm explaining everything as best as I can with the ability that I have to show you these are the steps I follow. I am following. I would advise you to follow to do this. That's all. Today, why we're bullish is since the open of the day, this market is one-sided, full stop. There is so much sell-side liquidity. So much. We're all ICT students, I'm assuming, so we know that that's all sell-side liquidity, right? But what makes this likely to happen? This up move must fail to remain bullish. If we were indicator, like specifically moving average traders, we'd have a moving average here, and then when it breaks down, this is no longer bullish and everybody's good. Or RSI, whatever. But something here would tell us that this is no longer bullish, and you'd use that to support being a bear. So probably not selling here, but selling in here is fine and then going lower. What I'm saying is, without using an indicator, this price action is not telling me that bullishness is done. What would tell me that bullishness is done is failing to do what is bullish at levels where bullishness should be implied. So to break that down a little bit further, key levels are where the market communicates with us, the speculators. We don't move markets. I don't move markets. I don't know what powers you have, but I don't move markets. So if key levels are where the market communicates, key levels are where you stock your confirmation. Key levels vary in importance. Key level for direction, key level for entry, key level for this, key level for that, key level for that. This is a key level for direction. What does that mean? If we're bearish, do not close above here. This is the high of a week. Well, I mean, this is like the high of a week. Treat it like the high of a week. So if we had a Wednesday high of the week and the market fails to break down, then Monday closed above, daily fair value gap, higher prices, yes? That's it. So what should print here to make me trust higher prices, and what should print here to let me trust lower prices? Simple. If it is bullish, we're not going to get above, we're not going to stay below that high. If it's bullish, it's going to get above it. But I know that we can reverse. I'm not crazy. Wait, let me trim again 1 second. That's an extra 50 points, or 40 at the very least. There we go.
Like what I find interesting about the point you're making, I guess, like I do understand what you're saying as far as like, okay, well, we've been one side. I want to like see a clean break of that order flow before I'm going short. But the one like piece that I have struggled to wrap my brain around is there are a lot of times when you're anticipating this creation of the order block and you're already slamming shorts as like that high is being ran.
I love that.
This particular instance to me,
I love that. Watch this. Watch this.
like
hold that thought for a second. Just hold that thought for a second, right? Retracements are likely to happen, guys. If you're in, please manage your trades. Come on, it's not a game. Anyway, where's that path tool? That's a bullish delivery. Deliveries create extremes. So we have low of delivery, high of delivery. I'm bearish. Market takes the high of the range. That up candle becomes my mile marker.
it becomes okay.
Yeah, it becomes my mile marker of higher prices. If there's a range high and a bearish order block prints, it's mile marker for if this, then that. If a bearish order block prints at a range high, if this, then that, it should hold price lower. So if it prints, then these are the things I'm going to follow to execute. CSD, my bearish order block, retrace, and I go short, targeting previous low. Simple. Nothing about this is strange, right?
Yeah.
I mean, honestly, Kish, if 720 was not here on the futures feed, I would have shorted this.
Oh, 100%. Like without a doubt.
Right.
I know, but
Right.
remember, we do this too often. Like, come on. In the first, this is
No,
the
no.
20th
I mean, today I felt like, okay, I want sell side, right? I want sell side, and then we want that big sell side run, and then that big buy. But there's also the caveat where we have the continuation pattern, which what worked out today. So, I mean, honestly speaking, if the 720 was not here, I would have shorted this. And I mean, honestly, I would have gotten stopped. But because 720 was here, I was thinking, okay, to be a bit more careful, I want to close and I want that, as I said earlier on the call. So that actually saved me from the short, which would have ended as a loss. And this long, I totally agree with this long. I fully understand the logic behind that. So it's just sometimes you're in
It's-
between two minds, you know.
Yeah,
Right. So
it's
I
kind of
I think the issue here is you would have seen a short here, and I get that. Anybody who saw this and expected or anticipated a short, please don't think I don't understand what you saw or what you wanted to do. It would be silly for me not to. What I'm saying is, let's go back here. Okay? I am using specific examples to teach a very, very methodical process. When you wake up, hopefully close to here, look left and anticipate one of two things. Number one, retracement to the open of the day. Number two, leaving the current range, which would mean the low since the low of the day, the low since the start of the day, and the high since the start of the day. This is where I am. I have no business looking at the low. Right here, this is the high. So I need to make decision around the key levels closer to price. What does that mean? If we get above this high, this is what makes the delivery bearish. Because again, it should go out of the range. It should not scream bullishness at 720 and that's it. It should get outside of the range. If it gets outside the range, this makes it bullish, this makes it bearish. Bearish order block CSD here, short, methodical, easy to follow. If you get a bearish order block there, look for your shorts, right? But this is a stop run. This is a stop run, which means my bearish order block should already be ding, 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 ding. That's the point of a stop run. If we have a stop run being stop run, and I think that's legal. What does it mean for what am I going to do next? I'm going to look at the delivery at the stop run to frame direction. What does that mean? If there's a purge of a stop run, mitigation. Where's the start of the run higher? Find a down candle, find its open price, look for a close below the open price. Amen. That's it. What if you don't get that? And what you get is close above the stop run, followed by down candles at the stop run that we CSD. In no world, CSD in a down candle is bearish. That's not what you want. You don't want down candle CSD at highs to be bearish. You want down candles highs and open to be left alone. So I don't know what's going to happen, but I know that this is the start of my delivery and this is my key level. This is looking awfully one-sided because it's just pushing, pushing, pushing. I will sell if this has no business going higher and it's starting to break down. I don't have to be in that exact high. Good short here and this would be a good trade. So now I'm looking. What needs to print here to show me that this is not breaking down? Down candle CSD, support narrative, higher prices, blah, blah, blah. What needs to print here to make me bearish? Down candles, expansion, CSD, purge and revert, everything. You can, like, I don't have to list everything. You understand what you should look for here. So that's how we're going into the charts. Understand this fully. I could have framed what I want to be a buyer and the market invalidated it. And I go short and target internal liquidity that you're looking for. Of course I could. But the analysis that I have must fail first. My analysis must fail for me to trade against it. Bam, bam, bam. All this other bag of chips. For the sake of completeness, the high on this is 960.6 and the close on this is 960.5. Huh. Awfully close, but not above it. I am not selling this. I'm not buying it either. There we go. Let's put that there too. I'm not buying that. Aha. Now I see somebody that I went to primary school with, or high school or middle school. I don't know what you guys call it, where you come from. Now I see an old friend. My old friend will have news for me because key levels communicate with us. What does this mean when a down candle prints here? Nothing. This down candle here means nothing at all. Absolutely nothing. Closing above there means something. Expanding here means something. CSD here means something. A delivery from this down candle to close through this open means something. A delivery from this down candle that rejects this open price means something. So now we have all the things that mean something. This means nothing, but it implies higher prices because we're closing about 50% of the order block. I could be a buyer. Remember when I said I could be a buyer in this candle? But this carries a degree of risk. If I buy here knowing that we can wick this, I want to get stopped out and then enter after. I don't want to get stopped out and then enter after. There we go. There we go. This didn't happen. We are wick rejection, whatever, doesn't matter. Didn't get there. Okay. Now this is looking awfully convinced that it wants to get there, but that's still not a buy. Still not a buy. At the expense of sounding repetitive, this is still not a buy. Okay. No. We spoke about all the things that mean something. This is one of them. And we know what this means. It means I can buy below the open of the next candle that prints. Where would I want to buy in here? Because, you know, why not? Open price, EQ, those are the levels. In hindsight, this just suddenly makes sense. Now that makes sense, right? Yes. But I'm showing you that we can read it logically and deduce the same information. My day is done. So
Kish. Kish.
He said his day is done. He went
Oh,
offline.
oh no, I didn't say anything. I'm just saying, like, seriously, this is what 9:50. You see where we're at right now? Why would my day not be done? On a Monday. On a Monday, we got this before 9 a.m. I have to be done.
So, Kish, would your bias still remain bullish if, let's say, 2 p.m. was not above us? And you would have seen that, green candle closing above that order block and then still framing it higher? Or
So that's a good question. 2 p.m. here is the target. It's the target. It's not the reason for bullishness. The reason for bullishness is here. So that's why I'm saying, despite me framing what I want for higher prices, if this and this did not happen, I'd be short. Because I'd be looking for framing that as a failure to give me what's bullish, and then this is my confirmation, and then sell a retracement, and life is good. What's 1 second?
Yeah, when we close above that high, Kish, will you be buying sell side liquidity? Maybe this low or this low? Well, that one will close above here. Or you're just buying the next candle straight. Did you get my question?
Sorry about that. Sorry about that.
Yeah, I was saying
Repeat the question, please.
I was saying when we close above here, when this candle close above here, which are you buying? Are you buying the sell side liquidity, or you're just buying it from here, then putting your stuff somewhere here?
That's a valid question. I just framed exactly what, unless you join the call late, which I doubt.
No,
So
I was in the culture, I'm just trying to find the
let's go left to right, left to right, left to right. You need to get not you specifically, right? I'm not taking a jab at you.
yeah.
We need to get out of this mindset. One sec, let me close my. This runner is no point in this staying on. Despite me wanting 2 p.m., there's no point in that staying on. There we go. End of that one. All right. We need to get used to the why and the what and stop seeing it after the fact. If this is a down candle and it's an order block, where would you buy?
After the close above the open of the other block.
Above the open of the order block? You'd buy it above the open of the order block?
No, after we buy above the open of the other block, the next candle.
You'd buy the retracement after the CSD. That's the correct answer.
Yeah.
Let that cook for a second. You buy the retracement after. Precision is what you look at when you decide if you want the open or EQ or internal liquidity inside the order block. That's because you want precision. But you know you should buy a retracement after the order block CSD. Amen? That's it. So let's go again. There's my order block candidate. It is not an order block yet. I'm going to buy the retracement after that candle. Where do I want it? Look at this. This structure alone says I should buy. Sorry. Whoa. This structure alone is telling me I need to buy at the EQ. There's a lot of things here that we could use to justify, and like internal liquidity. This don't we could do all of that. But I'm saying the moment you look at it, you should say that you want to buy EQ.
Just buy it.
Just do it. But
yeah.
there you go. You probably saw me buying it and think, ha,
Weren't you the one who was saying it's just a 10-point stop? So
Yeah.
Oh no.
I actually bought it. But I'm just asking for maybe something I go back this later.
Just poking fun.
Just
No,
looking for precision.
way too serious, man. Way too serious. But yeah, 2 p.m. is still what 100 and something plus points away. But I'm going to counsel you 1 to 14 RR. Wow, so dreams are made of. But I'm going to counsel you if you have a runner, keep your runner, have fun, do whatever. I'm personally done. I'll get my push-ups in. I'm gonna go stretch. I posted my entry in the chat for you to see. All right, I'm not just telling you to enter and then if it's a loss, we don't share the loss. We share the loss, we share the wins. That's what live trading is about. But yeah, I'm angry. 50 points is 50 points, man. Come on. But yeah, I am gonna get up. Unless you have any other questions for me, I am going to wish you guys a great day. I'm going to go check on the other PC if the call has been uploaded. It should just require me to click upload now, and that should be it. And then this will be uploaded as soon as it's finished. So
thank you, man. Thank you, guys.
You got that, David? You got that, Daniel?
No, I did not take it long. I thought you were insane there, but I will continue to be working today.
Oh man, you're my best friend. You know that? You're
Yep.
my best.
Respect, big man.
But yeah, see you guys in the chat.
Bye, guys. Thank you.
Bye bye.